Hey guys, welcome back. Now, this is a very exciting video as it's all about my decision to go all in on digital assets. Now, it's no secret that 2023 has not been an easy year for investors, with massive amounts of FUD about interest rates and inverted yield curves and broken bond market and constant recession fears. However, despite all of this, Bitcoin and crypto has had an amazing year. While the S&P 500 has had a great year at 18% so far, Bitcoin is now up 124%, Ethereum is up 63%, and some altcoins like Solana are up an incredible 500%. Now, as many of you all know, I've been a big proponent of keeping a good cash position to take advantage of any market direction. However, with the recent news that BlackRock and now Fidelity will also be launching Ethereum ETFs, this was the signal to me that it's time to go all in. And so, for those interested, this will be covering my biggest investment of a lifetime. We'll start with the big bet, the 5 reasons why I'm going all in now. Then we'll look at the risk curve. This one chart pretty much determines your entire portfolio and ultimately how much money you make. And then we'll finish up with my latest moves and full portfolio to take advantage of this coming mega bull market. So, quick disclaimer, this is a very high risk move and definitely not something to copy. It's likely a once in a lifetime move for a potential lifetime of financial freedom. Okay, so some very important things to cover, and let's start with the big bet. And so here are the 5 reasons behind the reason to go all in right now. And the first one, this is the stock to flow, and not necessarily that it's about stock to flow, but this chart clearly shows the cycles that are happening in Bitcoin and crypto, 4-year cycles based around the halving event. So the birth of Bitcoin here, and we can see massive bull market, big crash, then the halving event. Then what do we get? Another massive bull market, another massive crash, and then the halving event. We get another big bull market, another big crash, the halving event, another big bull market, another big crash, halving event. And so the bet here is that this is just going to continue. Now, whether behind all of this is just the liquidity from the global central banks, or whether it actually is to do with the halving events, or whether it's actually a bit of both, it doesn't matter. The bet is that this is just going to continue. And for me, I do plan on exiting before the next halving event. So it's a 2-year bet. Reason number 2, again, this is just Bitcoin's price shown in a slightly different way. This was the last big epic crash that happened, and this is where it ultimately bottomed out around this $15,000 mark. And there was about 3 months where you could get it at the absolute best price. Now, I was selling a property which unfortunately got delayed, so I never had the capital to really capitalize on this price. So anyone watching, if you bought around the 16,000, congratulations, you're in a very small group of people. But then what happened? We obviously saw this big jump, taking things to the early 20s, and I was doing some buying here. Then we had this fear, and everyone was saying that it's going to be going lower, setting new lows. But what was it? It was a higher low. And then what happened? The opposite. Another massive jump up to around the 25 to 30. Again, it hung around here for a long time, a lot of fear, uncertainty, and doubt, and it was coming down. Everyone's saying that it's going to be crashing and making new lows. And what did it do? Another leg higher, taking it to a higher high. And then More recently, lots of FUD, again, fear, uncertainty, and doubt, big drops, and everyone's saying it's going to be crashing to new lows. And what did it ultimately do? Another jump higher, setting a new high. So obviously, in hindsight, we can say the best thing you could have done was bought here, next was here, next was here. How many times does it have to go up before you realize that it's probably not going to be setting new lows? So again, reason number 2 is that I think the trend has reversed. Now, reason number 3 is looking at global assets. So the global bond market is around $100 trillion. Global stocks, you're looking at about 70 trillion. The gold market is around 10 trillion, and crypto right now is around 1.5 trillion. And so the bet is that this is going higher. It's going to take a percentage off the global markets. And for this to be doubling and tripling, it really doesn't have to take a lot of market share. So for me, it's quite an easy bet. A lot of people are calling that for the crypto market may be going to about 10 trillion in the next cycle, but by the time it hits 5 trillion, I will be out. Next, and this is the massive bet on supply and demand. So this narrative of the supply getting cut in half and massive new demand coming is only going to get stronger. And this is happening March, April time next year. So I think it's more likely that January, February, and March we're going to see big moves higher, anticipating these. Bitcoin's new supply getting cut in half, and then the biggest money manager, BlackRock, launching the ETF. And then more recently, an Ethereum ETF, but more on this a bit later. And when Bitcoin goes parabolic, it's not too long before altcoins do the same. Even though this is specific to Bitcoin, it's going to take the entire crypto market higher. And this is going to be a massively powerful narrative going into next year. And this is what I'm betting on. And then finally, reason number 5, how about this for a Black Friday sale coming very soon? Now, this is slightly off. Let's say Bitcoin's all-time high was about just under 70K. I mean, it's moving every day, but it's close to 35. So you're looking right now, Bitcoin is a 50% off sale. When it comes to Ethereum, it's roughly a 60% off sale. Coinbase is roughly a 70% off sale, and something like Solana, even though it's gone up 500%, it's still an 80% off sale from its all-time high. And so this is the final bet. I'm betting that this Black Friday deal, you will not see this again 1 year from now. I can virtually guarantee it's not going to be like this 1 year from now. So this year's Black Friday sale, I think, is something to definitely capitalize on. So there's some of the reasons why I've gone all in. Next up, one of the most important charts in investing, and that is the risk curve. So definitely something to familiarize yourself with, as this pretty much determines what you're going to be investing in and then ultimately how much money you make. Here we have the potential reward or return on investment you might get, and then this is how much risk you're willing to take. And then all investments, and also you personally, will sit somewhere on this risk curve. And where you sit on this curve depends on your personal situation, the size of your portfolio, your risk tolerance, your objectives, your financial knowledge, and then there's always our own opinions and biases that are sprinkled on top. Now, have you ever wondered why so many YouTubers or social media influencers all say that this is not financial advice? And it's because to be able to give financial advice it has to be based on these things. You need to know the situation of the person. You need to know how much money people have. You need to know their risk tolerance. What are their objectives? What is their current knowledge on investing, finance? And only once you know all of these things, you can actually give financial advice. And if you're just making a video that goes out to tens of thousands or hundreds of thousands of people, this is why it can never be financial advice. Now, you can use the risk curve in many different ways. This could just be the investments in your portfolio. So something like bonds might give a small potential reward, but you're only taking a small amount of risk. You'd go higher up for the stock market, higher up for things like the large cap digital assets, and then you'd be way down the risk curve or up the risk curve if you're looking at small cap cryptos. You could also use it just on your crypto portfolio. So something like Bitcoin would be here, where you're going to get a smaller reward in comparison to the risk that you're taking. Then something like Ethereum, you'd get a better return, but you're taking more risk. Then as you go down to the smaller cap cryptos, you can definitely be making 200%, 300%, 500%. These would be your 100x gains. But then once you're down here, you can absolutely blow out your portfolio, taking huge amounts of risk. So ultimately, you need to decide where you're going to sit on the risk curve. Now, moving on to my latest purchases and full portfolio and reasoning behind it. So this is how my net worth looks right now, pretty much very close to going all in. I do just have one segment left, which I'll hopefully be investing in the next week or so. But it's pretty much going all in on digital assets. And then the digital asset portfolio now looks like this. So first thing you'll notice is that the biggest slice is Ethereum. And you'll likely notice that there now isn't any Bitcoin, which a lot of the Bitcoin maxis are going to say it's a very controversial move. But let's look at some of the reasons why. So this is the altcoin season index, and when prices are going parabolic and you're going above this line, this is when you're in fully fledged altcoin season. When things are coming down and the market is crashing and it goes below this line, then you're very much in Bitcoin season, which is why right now everyone's talking about Bitcoin. Bitcoin is the safest bet in crypto. Bitcoin's having the ETFs. So we are fully fledged into Bitcoin season. However, I always want to be a contrarian, and the time to get into altcoins is not when they're tearing higher and in fully fledged altcoin season. This is the time to be selling, because once you're super high, then the risk is that all it can do is come back down. And as you'll know, you don't want to be in altcoins when things are coming back down. So the time to get into Bitcoin is above this line or very high up. And then on the flip side, the time to be getting in altcoins is in the very low levels in Bitcoin season. And this is when you make the massive gains in altcoins. So once we had the epic news that it wasn't just Bitcoin that's getting the BlackRock treatment, in fact, they're filing for a spot Ether ETF, this was the signal to me to be going all in. And then since then, a couple of days later, Fidelity has now filed for theirs. And it's pretty likely that over the coming days and weeks, more of the companies are going to do the same. So this was the huge green flag and catalyst for me to bet on the altcoins. Then next big bet, I really like the look of Coinbase. I then have a big bet on Ethereum's layer 2 optimism. And why optimism and not Arbitrum or Polygon? Well, it's a nice low cap, so this is my big low cap bet. And it was also chosen for Coinbase's base layer 2, and also Binance is building on it as well. And then the last thing I did was converting the Bitcoin piece into Solana. And even though this has gone up 500%, this is the reason why it's altcoin heavy. So at the beginning, we looked at the Black Friday sale with Bitcoin being off 50%, Ether 60, Coinbase 70, Solana 80. And you'd think that there's not much difference between these percentages, right? Just 10%. Just 10%. Well, check this out. Because going back up, this is what happens. Going back just to its all-time high, Bitcoin would be doing close to a 100% gain. Now, just 10% difference on the upside is now 150%. Just 10% difference is now 230%. And then for Solana, it's still 400% just to get back to its all-time high. We're not even talking about where it's going to go in the next cycle. And then for my final piece of money, I will be looking at Avalanche. And this time it's almost 600% just to get back to the all-time high. So based on my personal income goals, I'll be looking for a 300% gain over the next 2 years. I wasn't going to be able to achieve this with Bitcoin. So I've personally headed further down the risk curve. My large cap is now based on Ethereum, and then things that I think are going to massively outperform Coinbase, Solana, and Avalanche. And so, as you saw, lots of important topics covered on what will be the biggest trade of my lifetime, the 5 reasons why I've gone all in, why everything pretty much comes down to the risk curve, and my strategy for getting in earlier than most and getting out earlier than most. And right now, I'm sure I am a contrarian as it's all about Bitcoin, but when everyone's screaming about altcoins in a year or two, I'll be out. Finally, I take full responsibility that there is a big recession risk next year, which could crash risk assets. And if it does, I'll just have to ride it out. And similar to Michael Saylor, this move will either make me a big legend or a complete disaster. So I have to finish with a big disclaimer. This would be classed as extremely high risk, so please don't copy, and it's based on my own personal situation and income goals for the next 2 years. So there you are, guys. I hope you enjoyed. Now, any questions or comments, then leave them below. But just remember to get rid of 100% of the comment spam and trading bots that plague YouTube comments. We are trying out the new SuperThanks Commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.